So thank you all for hopping on with us this morning from the comfort of your own home as we practice our social distancing. I hope you all have your morning coffee or tea or cocoa or your favorite beverage and an appetite to learn a little bit about solar. I'll be providing a few helpful links in the chat section as we move through the webinar, so feel free to add your questions there as we go along, and we'll take some time at the end to answer any questions you have. In addition, you'll also have the opportunity to sign up for a 15-minute session with Kai, the solar guy, to ask any questions one-on-one or to get started with a custom quote. I'll be providing that link to you guys shortly. So I wanted to start with our broad vision. We care about people and we care about planet here. To do this, we focus on clean energy and building sustainability, not only in the economy, but also for the environment. These merge together with the underlying goal of building a healthy, shared future for us all. We've built our business on these core values, and one of the ways that we accomplish this is by being a certified B Corporation. And what is that? So in 2015, StraightUp Solar first became certified as a benefit corporation, or a B Corp for short. Certified B Corps are unique in the business world because they place people and planet above profit, the 3 Ps, and commit to high standards of social and environmental performance, transparency, and accountability. So we practice what we preach here. So who is StraightUp Solar? We're Illinois, Missouri's most experienced turnkey solar energy design and installation firm with over 1,300 installations since 2006. We help homeowners and businesses reduce electricity costs, gain energy independence, and secure a powerful return on your investment. And we're actually a full service solar provider, meaning that we assist with the entire process from engineering, procurement, construction, and installation. It's a pretty straightforward approach, and we work with you every step of the way to help bring clarity to the process. And speaking of clarity, we also practice clear values, which means we put community first. We try to lead the solar tribe by educating, advocating solar policy, respecting each other and the environment, and striving for excellence in all that we do. So now that we've told you a little bit about the company, we'd like to tell you a little bit about who you'll be talking with today. My name is Nicole Cooper. I'm a marketing coordinator here at StraightUp Solar since February of this year. So even though I'm a newbie here, I am very excited to contribute my design and marketing skills to the StraightUp Solar mission and to help create a more sustainable future. Here with me is Kai Ajayi, also known around here as Kai, the solar guy. Kai, do you want to tell a little about yourself?
Sure. As my brief bio there talks about, I have a background in political science. I taught for about almost 15 years in the political science arena. I have a background in business and in environmental consulting, and in alliance with the values of the company, I'm here to help folks and help the environment at the same time.
Thank you. So today, we'll actually be walking through quite a few topics. We'll be digging into the nuts and bolts of how solar is installed, to the environmental and financial benefits of going solar. Kai, are you ready to dig in?
Let's go for it. Good morning, all. My name's Kai. I'm here to walk you through Solar 101. All right, let's get started. This is a map of the continental United States, and the question we often get is there enough sun in Missouri and Illinois to make solar worthwhile? And the answer is an unequivocal yes. As you can see from this map, we are, especially central and southern Illinois and Missouri, we've got an excellent exposure to sun, so there's no doubt that we do have enough sunlight to make solar worthwhile. So that's out of the way. So now I guess the next question is, I'm still on the map. There we go. What sort of energy are we talking about? Well, as you can see from this graphic, the sun produces 23,000 terawatts of power every year. Compare that to the total reserve of coal of 900 terawatts. That's the total reserve. So you can see that from a renewable perspective, there's a lot of potential, ongoing potential, as opposed to the limited potential of non-renewables. Look at oil, for example, 240 terawatts compared to, and that's total, compared to 23,000 terawatts of solar. So the long and short of it is there are a lot of renewable options, and we should, it's incumbent on us as good stewards of the planet to at least look into them and see what's possible from a renewable perspective. I just thought that would be helpful for you to see. So let's talk about what happens when you get solar arrays installed. In this case, we have solar arrays on a rooftop. So the sunlight we just talked about hits the panels on the roof, and these generate DC electricity. Now, as you know, most homes use AC to run the appliances. So we have to convert this DC power into AC. And as the number 2 bullet will show you, that's accomplished using an inverter. So an inverter receives the DC current, converts it to AC so that you can use it in your home. So let's say it's midday on Tuesday in the pre-COVID days when you'd be out at work. Point 3 here shows you that that excess power goes out to the grid if you're not using it. If you are using it, it goes into the home. But if you are not using it, it goes back to the grid. I'm still on number 2 here, Nicole. There we go. So we're going to talk a little bit about net metering and what happens to the excess energy. But suffice it to say, if there's a need in your home, the energy that's produced by the solar array is going to go into your home first, and any excess you have goes back to the grid, depending on if you're in Illinois or in Missouri. And even within those 2 states, depending on which utility you have, you might get that energy stored on the grid for you. You might get direct credit for it. Either way, you're going to get some kind of value for the excess energy. In some cases, it's more lucrative than others, but we'll get into the details of net metering in just a bit. So the long and short of it is you've got energy in the home, and our technology is such that when you get a system installed, you will have monitoring software. So you can go online and see how much energy your array is producing, how much energy you're using, how much is getting pushed back to the grid. So you have a lot of information at your fingertips to help you understand and track exactly what's going on with your array. All right, let's get into some of this nitty-gritty stuff about net metering and solar production and so on. The graph to the left, the bars represent the utility use, and the shaded area under the dotted lines or under the line with the dots is your solar production. So you can see, still looking at the graph to the left, that in January and February, you underproduce and you overuse stuff from the utility. But from March through June, you're overproducing in terms of solar and so on down the line. Well, let's look at the chart to the right for a minute. And please bear with me, because this may be a little complex, but I'm sure we can all get through it together. This is an example from Ameren in Illinois. Ameren has a true-up period that begins on April 1st. What this means is that any energy you produce from April 1 through March 31, any excess energy that you haven't used by March 31 gets given away for free to the utility, and the clock restarts on April 1. So let's start up in April on in the chart to the right. And you'll see that in April, this customer, and this is an actual customer that I laid out an array for, she used almost 400 kilowatt hours in April, but her solar array produced 506 kilowatt hours. So what that means is her bill that month was 0 in terms of energy. Now there's some connection costs, and I'll show you that in an example bill in just a moment. But she paid nothing for her energy, and she had 109 extra kilowatt hours that were stored on the grid for her for future use. Now in May, she had about 350 kilowatt hours of use, but her solar array produced 682. So she had 325 additional credits, which get added to the 109. So now she's got 433. So you can see she overproduced in June to the tune of another 300 kilowatt odd. So her total was 766. Now look at July. She had 766 kilowatt hours of use, but only 704 produced. So she had a deficit of 62. However, she had a credit of 766 on the grid. So she still had a 0 energy payment. All that happened is that her credit in the utility went from 766 to 704. So April, May, June, and July, so far, there's been zero energy payment. She's had to pay to be connected to the grid, but in terms of paying for energy, her bill was zero. The same thing in September, October, November, December, January. Even those months where she underproduced, because she still had credit, she had a zero energy bill and she was pulling from those credits to pay her bill. So here we are in February, 503 kilowatt hours of use, 288 produced, which means that her bill should be $215 kilowatt hours, but she still had 186 kilowatts in credit. So her actual bill was for 26 kilowatt hours of use. Now in March, she overproduced. She had more solar than she actually used, 454 to 441. So she had 13 of credit, but because the end of March is where things zero out, now her balance is zero going into April for the next year. So this is really critical. When you work with StraightUp Solar, we look at your bill and we lay out an array for you that is going to get you as close to 100% offset as we can. However, depending on which utility you're in and whether the credits are zeroed out at the end of the month or at the end of the quarter, we take that all into account so that we don't give the utilities any free energy. All right, nobody wants to pay for a solar array that's going to give Ameren free money, right? They already get enough from us. So I hope this was sort of instructive in showing you how the net metering piece works, at least in the state of Illinois with Ameren. Okay. There is a very big misconception out in the public that if you've got solar and the grid goes down, you're going to be the only one on the block with your lights on. Well, that's only true if you have storage. And let me explain why. The National Electric Code requires that if the grid goes down, your solar turns off. Why is that? Well, imagine an outage and you've got folks working on the power lines trying to get your power back up or your neighbor's power back up since you have solar. Well, if your system is generating more energy than you're using and pushes that excess energy back to the grid, those folks working on the lines could get electrocuted. So by law, by code, your grid must shut down. The only time it's allowed to keep running is if you have storage or batteries. So if you have, for example, we're a certified Tesla Powerwall installer. If you had a couple of Tesla Powerwalls in your home, when the grid went down, your batteries would automatically kick in and your solar array would say, oh, energy's still flowing from outside, in this case from the battery, so we don't have to shut down, we can keep producing. Whereas if that battery wasn't there and the grid shut down, your solar would say, uh-oh, no power coming in, we've got to shut down. So the only way to keep your power on with a solar system, if the grid goes down, is if you have batteries also installed. I talked about bills, so let's take a look at a couple. The first one is from Missouri. This is a wide shot of it, and we're going to zoom in so that we can see some of these numbers a little more clearly. So in Ameren, the total energy consumed is 354 kilowatt hours. So that's what you in your home actually used. However, a solar array produced 462 kilowatt hours. So that's in excess of 108. So in the case of Ameren, Missouri, what they do is they give you a credit on a monthly basis for the amount of excess energy that you produce. Now you can see the red underline says total energy charge, and that's at 8.76 cents for every kilowatt hour that you use. But look at the charge on the extreme right, big fat zero. And if you look down at the green underlined portion, net metering purchase credit, 108 kilowatt hours, they paid you or paid this client 2.9 cents, so that the client got $3.13 credit. So I'm going to pretend we don't notice the fact that the amount that Ameren pays you is a lot different from the amount that they charge you, because that's a whole subject for a different seminar. But let the point being, the zero charge to the customer and $3.13 credits, better than a poke in the eye with a sharp stick. So that's the Ameren, Missouri approach. If we look at an Ameren, Illinois approach, again, this is a wide shot and we'll zoom in so you can see these numbers a bit more clearly. The customer here had 389 kilowatt hours of use, The array generated 902 kilowatt hours. So that's a difference of 513. What that means is that is credited to the customer for next month. And again, look at the last underlying number on the right. Supply net billable kilowatt hours, a big fat zero. Now down below, you see customer charge of $8.20, meter charge of 5.74. There's some other taxes and other fees that one gets charged. The solar array will never touch those charges. So there's always going to be a bill of some amount from your utility. It may be $17, it may be $22, something like that. That's the meter fee and these customer charges and so on and so forth. But what the solar array can do is get the energy piece down to zero, as you see in this example. So there are some very significant financial impacts of going solar. You can reduce the amount of energy costs that you have. But I've had many customers tell me, you know, Kai, okay, great. So I put the solar array on there and I save some money, but I'm really not doing that much for the environment with my little 7 kWdc array. And I say, nay, nay, let's take a look at exactly what that solar array does. A typical 7 kW array will offset a full year of driving. You know that most Americans, the average American drives about 15,000 miles a year. Every year that you have your solar array up on the roof, and it's going to last anywhere a minimum of 25 to 35, 40 years. Every year, it's the equivalent of one car being taken off the road, or fewer, reducing the number of smartphones charged by almost 780,000, or reducing the amount of coal burned by almost 7,000 pounds, or the equivalent of planting 100 trees and watching them grow for 10 years. Each year this is. So don't think that going solar is going to have minimal impact on the environment. Quite the opposite. It has a very, very significant impact in helping us save our planet, which is the mission of StraightUp Solar. So you've decided, okay, Kai, this sounds all great. The money's good, the environmental benefits, I get it. So what are my options? Well, it depends. Most folks are going to go with a rooftop array. If you have a nice south-facing roof with minimal obstructions in terms of large buildings nearby or trees directly south, you've got a good roof. We can mount on anything other than clay. So any other type of roof, we can put an array on. We prefer a nice south-facing roof that gives us maximum production, but we can install on east or west-facing roofs. There is a little bit of a reduction in production. However, it is possible and it can be feasible. Another alternative, and we see this a lot in Illinois and Missouri, are folks who have a lot of land, farmers, for example. We've done a lot of pig farmers, and they have the space to put a ground mount. One of the advantages of a ground mount is we can definitely align that facing south, and we can size it to match exactly what your electricity use is, so we can get you to 100% offset. So if you've got the room, we can do ground mount. If you've got a nice roof, we can put it on there as well. So there are options. What sort of modules or panels do we use on the roof? Well, we have two go-to manufacturers. The first is REC. This is a Norwegian company that manufactures in Singapore. One of the reasons we like REC is they are at a very attractive price point. And more importantly to me, they have a very low failure rate. So for every 4 million panels that REC produces, 400 are pulled back for quality issues. So they are a very high quality module or panel. The price point is very attractive. And if I were building, quite frankly, and putting something on my house, this is what I would go for. Now, LG is our other go-to option. They have a higher production module. We go with LG, and everybody knows about LG, right? You've seen the LG TVs and refrigerators and ovens, and I could go on and on and on. They're a very well-known name, very trusted brand. The quality is very high. The price point is a little bit higher. But with the higher price point and the higher production, I usually go to LG modules when the roofs I am trying to install on have limited space. So I need to maximize the production on the space. Then I can sacrifice cost for production and recommend LG. So depending on the amount of space on a roof, we can go with REC or LG. Either way, we're going to get you the production you need. So we know that modules or panels produce DC energy, and we know that homes use AC power. So how do we get that DC converted into AC power? And the answer is inverters. So on ground mounts, for example, the go-to inverter is an SMA. One of the reasons for going with SMA is that on ground mounts, you can usually be sure that there is no shading. And if there's no shading, there's no need for optimizers, which I'll talk about in a second. So you can go ahead and use an SMA, which has one of the lowest price points of all the inverters. The warranty is a basic 10-year, but you can move to a 15 or 20-year warranty at additional cost. Now, homes, a home with shading, I will suggest either a Solar Edge or an N-phase. Now, the advantage of Solar Edge is that in addition to the inverter, which sits either in your basement or in your garage, or in some cases on the outside of your home to do the DC to AC conversion, in addition to that actual box, Solar Edge provides optimizers, which go on the backside, on the underside of each module. And here's what optimizers do. Let's imagine you had an array on your roof, and a flock of geese fly over, and they release, how should I put this, some solid waste onto 2 of your panels. And that drops the production of those panels from 90% to 60%. If you had an SMA inverter, those 2 panels that dropped to 60% would impact all the other modules on that string, and every panel would then drop to 60%. With optimizers, only those 2 panels that have that solid waste on them would drop to 60%, the rest would produce at 90. So the advantage of a Solar Edge inverter with power optimizers is that there's independent, if you will, control of each module. The one module does not impact the others on the string. One advantage of Solar Edge is that the optimizers themselves have a 25-year warranty, and the inverter has a 12-year warranty, which can be extended to 20 years at additional cost. Now, N-phase takes things one step further. Rather than optimizers underneath each module, they have microinverters. These do 2 things. One, they serve the same function as an optimizer to allow each panel's production not to impact the others, but they also convert DC power to AC at the module. So that there's no need for an inverter in your basement or in your garage on the outside of your home. All the DC to AC conversion is happening at the panel level. So what's coming off your roof is actually AC power that can go directly into your home and be used without having to pass through a separate inverter. Another advantage of N-phase is that these microinverters come with a 25-year warranty. So we have options depending on a particular situation, and that's one thing we pride ourselves on. We don't have a cookie cutter approach to any project. Every project is individually developed to maximize your dollar. Speaking of dollars, show me the money, customers say. All right, so you've told me I can save money on the energy. That's great, I understand that. And the environment, yeah, I'm no tree hugger. Tell me about the money. What are these incentives that are being produced? All right, let's talk about the federal level first. There was a 30% tax credit in 2019. It's dropped to 26% this year, 22 next, and then it goes away. In order to monetize this tax credit, you need to have tax appetite. I'm going to talk about that in this example to the right in just a second. I want to add that if to get solar panels on your roof, for example, you need to reinforce your roof, the money you spend doing anything related to the solar install can be added to this 26% total. So if it was $20,000 for the array itself and $5,000 for the reinforcement, you could claim 26% of the entire $25,000. Now, whoever's the person taking the tax credit must be the person who owns the home that the array is being installed on. All right. Let me walk you through a quick example to try to illustrate how this federal investment tax credit works and how you can monetize it. Jane has W-2 income of $75,000. Her deductions are about $25,000, so her taxable income is going to be $50,000. Now, let's assume that Jane's tax liability is 20%, so that means her tax liability is $10,000. She buys a solar system for $20,000. The tax credit is $5,200, 26% of the $20,000. So her new tax liability is $4,800. So there's $5,200 in a one-for-one, non-refundable tax credit against liability. All right, that's what this tax credit is. All right, I'm going to pause here. I'm going to take off my StraightUp Solar hat. I'm going to put my regular American taxpayer hat on and give you another example of how you can figure out if this can be monetized, or how monetization, what monetization would look like. I am not a tax professional. Please consult with your own to determine if you have the tax appetite to monetize this tax credit. But let's go back to Jane for a second. Jane is really smart. She knew she was going to earn $75,000. She knew her deductions were going to be about $25,000. She knew that her tax liability was going to be about $10,000. So she made arrangements with her employer on her W-2 to have enough withheld from her check every month so that at the end of the year, she would have had about $10,000 withheld. So come tax time, she'd have no life, she'd owe nothing to the IRS, and she wouldn't be getting anything back because she's paid the 10 grand, she's all good, or she's had the 10 grand withheld. But hey, during the year, she buys a $20,000 solar system, which means that she's got a tax credit of $5,200, which means her liability that was $10,000 is now only $4,800. So what happens? She gets a check back from the government for $5,200. Let's take another example. Jane's sister, Jill, she says, I'm not giving the government my money. I'm going to put it in a bank account and earn the interest myself. So she has nothing withheld from her taxes. She has $10,000 at the end of the year in a bank account, plus the interest that she's earned. And she's now ready come April 15 to write the check to the IRS for $10,000. But she also bought a solar system, and it was $20,000. So she's got this $5,200 credit. So her new liability is $4,800. That's the amount she has to write the check for, not $5,200. I'm sorry, not $10,000. So that $5,200 remains in her account for her to go to the Bahamas and do whatever she wants to do. All right, so you need to talk to your tax professional to find out, do you have tax liability that will allow you to monetize the federal tax credit? Okay, throwing away my taxpayer hat and putting back on my StraightUp Solar hat. Let's talk about renewable energy credits. So FEJA, the Future Energy Jobs Act of 2016, required the utilities to get to 25% renewable energy by 2025. There's no way they're going to be able to do that. So in order to meet that goal, what they've been allowed to do is to buy renewable energy from us. If we install a solar array, the renewable energy that we produce, we can quote unquote sell to the utilities so that they can claim our energy as their energy. The energy is still flowing into your house, it's still offsetting your bill, but the utilities get to claim that, hey, this 7.7 kW system in central Illinois is part of our renewable portfolio. Okay, so that's the logic behind it. Now, every SREC, or solar renewable energy credit, that they buy is the equivalent of 1 megawatt hour or 1,000 kilowatt hours of production. So a typical home will produce about 10 megawatts a year, and that means you'll get 10 SRECs a year. But the SREC contracts are for 15 years. So in this case, you get 100 payment for 150 SRECs. And what happens is we will help you figure out how much production we think your array is going to average over 15 years. And then the SRECs get paid up front if it's under 10 kW. So an under 10 kW system, our approved vendor, Carbon Solution Group, when they get all of the projects that they've been involved with together, they send them off to the Illinois Commerce Commission. The Illinois Commerce Commission takes some time to do all their things and verify that the arrays are up to par. And then they pay Carbon Solution Group. Carbon Solution Group turns around and pays you. So if you get a system installed, about 9 to 12 months after the system is energized, you get one big fat check if you're under 10 kW AC from Carbon Solution Group. Here's an example. There was a 7.7 kW system in central Illinois that we developed. The SREC check was almost $9,800. And that check comes one time, one nice check to you 9 to 12 months after your system is energized. Now let me point out, this money is taxable. The state and the feds are going to come for their cut. But still, let them take, what, 25% off? You're still in pretty good shape with that check. All right. In Missouri, Ameren, Missouri has this rebate through the Grid Modernization Act of 2018. So any arrays installed between June of 19 and December of 2023 gets a 0.25 cents per watt rebate, okay? After we install, we submit for your rebate, we provide all the information. Ameren comes and installs a bidirectional meter, and a few weeks later, you get your check. It comes directly from Ameren, Missouri. Here's an example, a 7 kilowatt system in central Missouri. 7 kW times 25 cents, so 7,000 times 25 cents comes to $1,750. Not as lucrative as in Illinois, but again, better than a poke in the eye with a sharp stick. There's still some money coming back to you from the utility in Missouri. All right. Here's a case study of the Voss array. The Voss family had a 5.36 kilowatt DC system installed. It cost them just under $16,700, $3.10 a watt. This was last year, so they got the 30% tax credit. So they got about $5,000 in tax credits. The SREC value was almost $3,800. So their cost, after all the incentives, was just under $8,000. The array is estimated to save them on their utility side about $32,000 a year. And the payback for this system is just a hair over 8 years. We typically shoot for a payback on a residential system somewhere between 8 and 12 years. That's where they tend to fall, more or less depending on how much the array can produce and how large the SREC can be. Okay, financing. Not everybody has $20,000, $30,000 sitting around, so how do we pay for this thing? Well, we have partnered with the Clean Energy Credit Union. This is an Amicus partner. Amicus is a collective of smaller, like-minded solar professionals or renewable professionals who have banded together to try to save their customers money and also to find, like in this case, creative and helpful solutions to finance solar or renewable purchases. So the Clean Energy Credit Union was formed specifically to help with renewable purchases. So with a $250 down payment, the Clean Energy Credit Union provides what they call a combo loan. It's split into two. The first loan is for 26% of the total project cost. 26%, that sounds awfully like the federal investment tax credit. Exactly. It's 18 months. They'll give you this 26% for 18 months at zero interest. The idea is for you to have time to file your taxes, monetize the tax credit, and pay this off all within 18 months, and then you have no interest on that portion of the loan. The balance, the 74%, is loaned to you for 12 years at 2.99%. So it's a low term, a short term, and a very low interest rate. I want to point out that the SREC money that you get back, I told you about Jill taking that money to go to the Bahamas. Jill could also, if she'd gone through a loan, use that SREC money to pay down the principal on this loan, which while it would keep your loan payment the same, it would reduce the term. So instead of a 12-year loan, you might have an 8-year loan or a 6-year loan, which is going to save you a lot of money on interest. But 2.99% on 74% of the total project cost, it's virtually impossible to beat that on the open market. The state of Missouri has another form of financing called PACE financing. I don't really have enough time to go through all the ins and outs of this with you in this seminar. If you go to this link right here, it'll show you how the state of Missouri uses property tax offsets to help finance a solar array. There's a link there for you to get some more information about that. Okay, Kai, you say, that's it, I'm sold. You showed me it's going to save me on my electricity bill. It's going to be great for the environment. I've got all these wonderful incentives. I'm ready to sign up. What do I do? Well, we've got a simple 5-step process for you. First, we need some basic information. Where's your home? What's your electricity bill look like? And what are your goals for this project? Once we have that information, it comes to me or someone like me, a project developer within our firm, and we customize an array for you. We'll discuss it with you, make sure that we tweak it so that it meets exactly what you desire. If it's all good, we'll sign a purchase agreement. We'll pass you to our project managers who will work with you through the technical on-site, getting the engineered documents so that we can get you permitted. Our install crew comes out and does a beautiful job with your install. You turn it on and lo and behold, you've got nice clean energy feeding your home, charging your RV, your EV, RV too if you like, all from the free rays from the sun. I think Nicole just shared with you a link. If you'd like to have a 15-minute or so one-on-one session with me, my phone number and email address has been provided to you. I'd be more than happy to talk about your specific situation and give you some basics on how we could move forward with you. So that's my portion. I'll turn things over to Nicole to wrap up.
Thank you, Kai, for sharing with us today. So this concludes the presentation portion of Solar 101. Now we have time to answer a few questions if you guys have questions. Yeah, I did drop that link to the 15-minute session with Kai into the chat, along with the other like helpful links along the way. So if you haven't opened that up, you can just pop in there and check that out now. Yeah, or you can contact Kai directly at, I think everybody is on here and can like see the screen, but in case anybody is calling in on a phone, it's Kai Ajayi, that's ky.ajayyi at straightupsolar.com, or you can call him at 309-319-6093, or of course you can also get more information on straightupsolar.com.